Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 31st. Happy week to all of you guys. Hope you guys have some great upcoming plans today. Hopefully you even enjoyed your weekend. Here's some Halloween parties. Be safe and have fun out there. Hey, we got a bit of things to go over today, so let's jump right into it. The economic. Today we'll start off with the personal income for the month of September. So the previous month, back in August, it went up 0.2% the personal income, so people make a little bit more. Forecast supposed to go up to 0.4% in the month of September. It did rise, but not quite to 4%, so slightly below expectations at 0.3%, but still did rise, which is obviously good news. Now we got the opposite of the spectrum with consumer spending, so people spending out there. And back in August, we had a 0.1% decrease, so people pulled back on their spending in September. And then forecast for last month was 0.4%, and it actually exceeded that 0.5%, so it went up 0.5% in September, which is great news. Probably the best we've seen in like several months for consumer spending jumping up like that. We also got the core inflation. This is the PCE, or personal consumption and expenditure. When you strip out the food and energy, we got the core. This is what the Fed really looks at for the inflation data. So back in August, we had a 0.2% increase with the core data, and they look at year over year, so the last 12 months. And forecast is supposed to go up 0.1% for the month of September, and it did go up to 0.1%. So right now, year over year, we're still at the 1.7%, still off the 2% mark, what the Fed would like it to be at. But we are a little bit higher. Last month we did go up. If you recall, we were at 1.6, and last month it went up to 1.7. Last but not least, we get the Chicago PMI for the month of October. This is the manufacturing in the Chicago region. So we were getting decent numbers out of the Northeast, but Chicago dropped a bit. So as you can see here, we had anything above 50 is considered expansion. Anything below that, it contracts. And the month of September, we had a 54.2. In the month of October, it dropped to 50.6. So just barely staying in the expansion border here. So again, if we had dropped a little bit less, or like 1 point lower, we would be in the contraction area. So again, manufacturing dropped off quite a bit in Chicago from September to October here. So let's take a look here. And stock market's up. They really like that consumer spending up there. They really need consumer spending to be up there. So if consumer spending continues, that means more jobs will be created as a result. The economy is kind of moving along there. So they basically, that consumer spending in of itself is kind of what they were looking at, and that's really what is driving today's stock market. It's not up a lot, but it's up. It's really what's helping out the stock market today on there. Oil, on the other hand, OPEC had a meeting over the weekend. They just can't seem to get. They seem to be losing a lot of influence. They don't. They can't seem to come to a conclusion of creating a cap on the oil production out there, because there's too many people who are not in the oil part of OPEC that are producing oil and producing at a cheaper level, and as a result, other countries within OPEC are not want to agree, because they don't want to be, basically they're being influenced from the outside. So you got people like the U.S. and some other countries that are still producing oil, and they just don't want to be outproduced, so to speak, from these other outsiders. So they're having a hard time coming to an agreement there. So as a result, it's actually down to about $47 a barrel today. It's dropped over the last few days here. Also on the bond market, here we see the one thing I do like about, as we saw last week, we were having this trend line downwards. Today we start upwards, higher than where we left off on Friday, where we started Friday, which was below the 200-day moving average. Even though we're down for the day, we're down about 3 basis points. The good news is that we're started a little bit higher, so we kind of break that trend a little bit here. So we'll kind of see if it goes sideways, if we can go upwards. We want to definitely stay above this 200-day moving average. We have, as you can see, we've tested 2 days, Thursday and Friday we tested it. So we don't really want to test it too much, because if we do, we could easily break below that 200-day moving average, giving us higher interest rates as a result. So right now, interest rates are about the same where we left off on Friday. Again, good news is that we didn't start off down here further. All right, folks. So interest rates are about the same as where we left off on Friday. Hope you guys have a great Halloween, great day today, and we'll see you guys tomorrow. Tomorrow's gonna be a big day. We have the Fed meeting, FOMC, starting this week, with starting their meeting tomorrow, and then giving their announcement on Wednesday. They have that 2-day average. There's no expectations, almost 0% that they'll raise rates at this particular meeting, but it is about 74% for them to raise it in the December meeting. So everybody thinks they're gonna. It's pretty much everybody basically believes the Fed will raise it in December here. Also, if you guys want to get updates throughout the day, continue updates rather than just watching the video here, I do post updates throughout the day at Mike Bjork on Twitter. My Twitter account is Mike Bjork, MikeBjork. Just go ahead and follow me there, and you'll get some updates as they come up throughout the day. All right, folks, you guys have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.